Zambia Institute of Chartered Accountants Virtual Examination Techniques meeting for CA 3.2 Advanced Audit and Assurance. My name is Peterson Mumbuluma. The scope and reference of the meeting include the following: general competencies required by candidates to sit for this examination, common mistakes made by candidates, draft examination standard questions suggesting the approach that should be taken by candidates and common mistakes made by candidates, syllabus command words, and in addition, there will be an overview of the major topics for advanced audit and assurance. The general competencies required: at the final level of the examinations, there will be scenarios that are more professionally challenging, asking for development of professional advice. On completion, candidates should reach competence levels to be able to evaluate the legal, regulatory, and ethical issues involved with audit and assurance engagements. Apply best practice in acceptance and management of audit and assurance engagements. Appropriately plan, execute, and report on audit and assurance assignments. Note: engagement planning, execution of reporting remain the main focus of the module, and a deep engagement with ethical issues and appropriate behavior will form much of the development of students' abilities as they apply their skills to a variety of complex audit and assurance problems. Levels and learning outcomes. The verbs used in tasks in the examinations include the following: identifying, explaining, calculating, analyzing, evaluating, advice, and they will be more biased towards the higher level verbs of analyze, evaluate, and advise. The syllabus weightings according to the syllabus are as given on the slide. Legal, regulatory, and ethical issues comprise 15% of the syllabus. Acceptance and management of audit and assurance engagements, 15% of the syllabus. Plan and execute audit and assurance engagements, 40% of the syllabus. Concluding and reporting on audit and assurance assignments, 30%, totaling up to 100%. And the examination will more or less be weighted according to these weightings, and therefore candidates should be able to know which areas to cover in more depth than other areas. CA 3.2 Advanced Audit and Assurance, the examination. The format of the examination is that in Section A, there's one compulsory scenario-based question of 40 marks. Section B comprises 4 optional questions, and candidates are expected or required to attempt any 3 questions of 20 marks each, totaling 100 marks. And so in theory, in order to obtain a pass, candidates are at least expected to score as indicated in the first 2 columns. In other words, candidates should score at least 50% in each of the questions that they attempt to be able to score an overall 50% pass required. For example, question 1, which has a maximum of 40 marks, a candidate should score at least 20 marks. And in each of the 3 optional questions attempted, score at least 10 marks, and therefore adding up to 30 plus the 20 in the compulsory question, 50 marks. But in reality, candidates may score more or less marks in either the compulsory or optional questions. And therefore, they should bear in mind that they need to compensate the loss of marks from below 50% in either the compulsory and optional questions. And so I've put 3 scenarios, or is it 4 scenarios, which you can use to just compare and see. For example, in case number 1, if a candidate scores 24 marks out of 40 marks in question 1, they can still pass the exam by scoring 9 points out of 20 in question 2, 11 out of 20 in question 4, and 8 out of 20 in question 5. And the total score will be 52, and they would have passed the exam. And you will notice at this stage that if the candidate did not attempt the final question, the question 5, then they would fall below the 50%. If you look at scenario number 2, a candidate can score, and that's what actually happens, 27 marks out of 40 in question 1, 8 marks out of 20 in question 2, 7 marks out of 20 in question 4, and 9 marks out of 20 in question 5. Still, the candidate will pass the exam and score 51. And the pass rates below 50% in the optional questions have been compensated by the high pass rate in question 1. Scenario 3, a candidate scores 26 out of 40 in the compulsory question, which is very good, scores 11 out of 20 marks in optional question number 2, which is very good, and scores 7 out of 20 in the final question, but fails to attempt the 4th question. Such a candidate will not be able to marshal enough marks to pass the examination, and therefore they will get only 44 and fail the examination. However, if that same candidate attempted the last question, then they would still pass the examination. So it's very important for candidates to ensure that they attempt all the 4 questions, otherwise they reduce their chances of passing the examination. The table on the screen is an analysis of question 1 and the topics that have been examined in the last 1, 2, 3, 4, 5, 6, 7, 8 sessions. An analysis of question 1, which is the compulsory question. And you will notice the topics that have been examined at almost every examination sitting. Audit risk has been examined in all cases except for 2 sittings in September 2021 and December 2022. Business risk has been examined in 4 out of those sittings that have been analyzed. Ethics have been examined in the compulsory section in almost all the sessions except for September 2022. Audit procedures have been examined 5 times of the total number of settings that have been analyzed, and in auditing standards in 1 setting. The rest of the marks to make up the 40 marks are on other topics. So it is important to notice that the examination at this stage is almost predictable in terms of the major topics that are always examined in the compulsory section. And therefore, candidates are reminded to ensure that they fully understand these topics of audit risk, business risk, ethics, and audit procedures if they are to increase their chances of passing the examination. A summary of the performance of the advanced and audit paper for the last 5 sittings is given as follows. Considering the number of candidates, those that have passed the exam, and the pass rates, you will notice that the pass rates for the last 5 sittings are as follows. March 2022, the pass rate was 25.4%. June 2022, 41%, which was quite high. September 2022, 24%. December 2022, 16%, and in March 2023, 22%. And you will notice that on average, the pass rate is below 30%. And the highest scores are shown there, with the highest being 69 in the 5 sittings, and the lowest being 16.6. And so the pass rate is quite low at below 30% on average. And then if you look at the analysis of the questions 1, 2, 3, 4, and 5, to try and establish how many candidates score more than 50% of the available marks. In the case of question 1, scoring more than 20 of the available 40 marks. You will notice in the case of question 1, 60% of the candidates in March 2022 scored more than 50%, got more than 20 marks. In June 2022, only 31% scored more than 50% of the available marks. In 2022, 58%, 24% for December, and 69%. On average, you will notice that students perform better in the compulsory question, which is a scenario-based question. When you look at the optional questions 2, 3, 4, and 5, you will notice that less than 50% of the candidates in all cases got more than 50% of the available marks. For example, in March 2022, in question 2, only 11% of the candidates who attempted this question scored more than 10 marks of the 20 marks available. In question 3, 35% of the 46 candidates who attempted this question scored more than half the available marks. So in all these cases, students are performing poorly in the optional section of the examination, and we will examine why that is the case in a short while from now. Comparing the performance of CA 3.2, we want to look at the pass rates compared to other CA advisory level papers. And you will notice when you analyze this information that 3.2 ranks number 4 in terms of performance, not the worst paper, so to say, at the advisory level. I have highlighted 2.1, which is financial reporting, and 2.3, which is principles of auditing, as well as advanced financial reporting and advanced audit and assurance, because these papers are related. One cannot perform audits unless they understand the financial reporting aspects. And therefore, you will notice some interesting findings here. The performance in 2.1 and 2.3 is comparable, not very good in all cases. That probably indicates that students or candidates do not fully understand financial reporting and therefore cannot perform audits on something that they do not understand. It is more clear when you compare 3.1, which is advanced financial reporting, and advanced audit and assurance. In March 2022, the pass rate for advanced financial reporting was 23.5%. It was 25.4% in advanced audit. Compare June 2022, 42 and 41.8%. September 2022, 27 and 24%. It was worse in auditing. And December 2022, 47 and 16%. On average, the poor performance in advanced audit and assurance can be attributed to the lack of clear understanding of financial reporting. And therefore, candidates are reminded that as they are studying for advanced audit and assurance, they must ensure that for the relevant topics, they fully understand the accounting aspects. If they've forgotten what the accounting aspects are, they are encouraged to go back to financial reporting and ensure that they understand the accounting. Only then can they deal with the auditing issues. An evaluation of those statistics will indicate that the CA 3.2 for 4 and 5 sessions below 30% pass rate, which is quite low. In all of the 5 sessions, only 4 of those sessions, candidates scored less than 30%. The highest mark was 60 to 69 at the 5 sessions, and the lowest mark 15%. As earlier stated, except for 2 sessions, most of the performance in the optional questions is below 50%. In the optional section, there is no optional question in the 5 sessions where more than 50% of the candidates who attempted the questions scored 50 or more of the available marks. The average score per optional question in these sessions is 7 out of 20 marks, which is very low, and therefore attributing the poor performance in the paper. Comparatively, performance on CA 3.2 Advanced Audit and Assurance ranks number 4 in terms of performance of the CA and advisory papers of the program. The poor performance in financial reporting is related to the poor performance in advanced audit and assurance. Now, what is the prior knowledge required for a candidate to sit and competently prepare for this examination? First of all, they must have a good understanding of principles of auditing, which is the earlier paper in the program. Advanced audit and assurance is the second of the 2 auditing papers in the program. And so on completion of the Zika program, candidates are expected to conduct audits with minimum supervision, and therefore they must fully understand the principles of auditing before they can actually do the advanced audit paper. Further, candidates must have a good understanding of financial reporting. The scope of audits are the financial statements prepared by management, on which the auditors are expected or required to give assurance to the shareholders. Candidates should therefore have a good understanding of financial reporting to be able to suggest suitable audit procedures. Practical work experience is an added advantage. The examination is more practical than theoretical, and so candidates with practical work experience must use their experience in the office, in the workplace, in answering examination questions. The subject is of a practical nature, but even candidates who have no experience, if they prepare adequately, they should be able to pass the examination without any problems. Of course, candidates should ensure that they possess the latest manual for advanced audit and assurance issued by the Zambia Institute of Chartered Accountants, the revision kit, and also a student's handbook, which they must refer to from time to time to ensure that they cover the syllabus requirements. Preferably, candidates should try and get access to an actual set of financial statements like the one I'm holding here. This is an actual set of financial statements, and go through it and ensure that you understand and be able to apply the theory to what actually is expected to be applied. Snapshot of selected topics. We are going to have a brief preview of the following topics: elements of assurance engagements, management and auditor responsibilities for the financial statements, the link between management and the shareholders, financial statement assertions, draft financial statements, accounting and auditing standards, auditing procedures, business and audit risks, professional ethics, audit teams and stages of a typical audit assignment, finalization and review, and finally, audit reports. Assurance provision is undertaken by auditors to interested parties, who are the shareholders and other stakeholders. The auditors are required or expected to be independent and objective in the performance of their work. Management prepares financial statements on behalf of their shareholders. Management run the company on behalf of the shareholders, and the link between management and the shareholders is in the financial statements prepared by management. There are other stakeholders who are interested in the performance of an entity, and all those require assurance that the financial statements prepared by management give a true and fair view. And therefore, the link between management and the auditors is at the annual general meeting, which is held annually, at which the financial statements are reviewed and considered. The elements of an assurance engagement is basically, the assurance engagement is the relationship between the auditors, the management, and the shareholders. And there are 5 elements that we must clearly understand of an assurance engagement. And we can use the mnemonic CREST. The C stands for criteria, which is the basis on which the financial statements are prepared. And management are required to prepare the accounts according to the International Financial Reporting Standards or any other regulations that may exist. And so the first element is that of the criteria, which the auditors will use to check whether or not the financial statements have been prepared in accordance with that criteria. Then there's the report. The outcome of the audit is the audit report that the auditors issue at the end of the audit. And this is the one that contains the audit opinion. And it is based on the evidence that the auditors would have gathered during the audit. And so the third element of the assurance engagement is the evidence. This is where the auditors perform the actual audit work and gather evidence by performing audit procedures on the figures contained in the financial statements, namely the profit or loss account and the statement of financial position and the related notes. And that evidence gathered is the basis on which the opinion will be reached. Then finally, is the subject matter. This assurance engagement surrounds the financial statements. It is the financial statements that the auditors are concerned about. It is the figures in the financial statements that the auditors will be gathering evidence on. And it's the financial statements that the auditors are supposed to give assurance to the shareholders and other stakeholders. So candidates should ensure that they understand the elements of an assurance engagement. A past examination question at CA 3.2 required candidates to identify the elements of an assurance engagement using the information in the scenario. Many candidates just explained generally without using the information in the scenario, and it was worth 10 marks, and a number of candidates, a substantial number of candidates, lost marks in a simple, straightforward, knowledge-based question like that. So the three-part relationship is basically the last element of the assurance engagement. And these three parties are the management, the auditors, and the shareholders. They are part of the three-party relationship. Management's responsibilities for the financial statements. Management has the primary responsibility for the preparation of the financial statements. It is not the auditors who are required to prepare the financial statements. Management must prepare these financial statements in compliance with the International Financial Reporting Standards and any other applicable regulations. And then auditors are not required to take management responsibility. Auditors should not take, unless they do it as a separate assignment for which they will be paid. Internal controls also, management is responsible for the internal controls in the company to help prevent and detect fraud and error. They have the primary responsibilities. Statutory auditors may rely on the internal controls in designing the procedures that they are going to perform. But management is responsible for both preparation of the financial statements and for putting in place suitable controls. As regards the auditors, the statutory auditors, their objective is to obtain sufficient, appropriate audit evidence on the financial statements prepared by management and form an opinion based on the evidence obtained, and then report to the shareholders through the audit report. And then they are required to conduct audits in accordance with the international standards on auditing. Now, the link between management and shareholders, briefly, so that we understand what is happening here. The audited financial statements contained in the report to shareholders. So the audited financial statements that the auditors have audited are contained in a document known as a report to shareholders, which contains other information as well. The shareholders do not take part in the day-to-day running of the company. It is management who runs the company on their behalf. Management is acting as stewards or agents on behalf of the shareholders, and so they prepare the financial statements. The role of the external auditors is to act on behalf of the shareholders and give an independent, objective judgment or opinion on the financial statements prepared by management. And so they perform audit procedures and form an opinion on the financial statements and report to the shareholders. The report of the auditors is addressed to the shareholders, is meant for the shareholders. And the financial statements are considered at the annual general meeting at the end of each year, where all the three parties are in attendance, and they discuss and consider the figures contained in the financial statements. Let's now look at financial statements and financial statement assertions. What is an assertion? The meaning of an assertion. An assertion can be said to be a claim by somebody, a claim about something. In terms of financial statement assertions, we are talking about claims management make on the figures contained in the financial statements. By putting figures in the profit or loss account, in the statement of financial position, management are making certain claims about those figures. For example, by putting a figure of motor vehicles in the statement of financial position, management are claiming that the motor vehicles represented by that figure actually existed at the end of the year. And therefore, that is a claim. Until the auditors gather evidence, it is only a claim. Another example, in the profit or loss account, for example, sales revenue transactions from the first day of the financial year. Sorry about that. I think let me just, I'll go back. Okay. Financial statement assertions. These are claims or representations made by management on the figures contained in the financial statements. And the figures are contained in the profit or loss account, the statement of financial position, and the related notes. And financial statement assertions are basically about classes of transactions and the related disclosures. Transactions are contained in the profit or loss account. The profit or loss account contains or comprises transactions from the beginning of the financial period to the end of the financial period. For example, revenue contained in the profit or loss account includes revenue on the first day of the accounting period, revenue on the second day, and so on, including the revenue on the final day, the whole year. In the case of the statement of financial position and the related balances or disclosures. This is the figures contained in the balance sheet, as previously known, at the end of a particular period. It's not cumulative. If the year end is 31st December 2023, for example, the assertions are about the figures on that date, 31st March 2023. It contains assets and liability balances at the period end, and closing balances for that year end will be the opening balances for the following accounting period. So management make assertions about these figures, and they are only claims until the auditors perform the audit and confirm that indeed those assertions hold true. In terms of draft financial statements, what happens before an audit is that management will prepare draft financial statements. Why are they called draft financial statements? Because they can still be amended if there are any errors or omissions that are found. The audit and the financial statements can only be called or stated as final financial statements when the audit has been concluded. And so management present the auditors with a set of draft financial statements, and then the auditors perform the audit on the draft figures, and ultimately when the audit is done, then the final financial statements for consideration by the shareholders are prepared. Let's look at the accounting and auditing standards. In order to pass this examination, candidates need to be fully aware or conversant with the accounting and auditing standards. The accounting standards are for the preparers of financial statements, and those are taught by the lecturers in financial reporting. Okay? And these are the International Financial Reporting Standards and the International Accounting Standards. And as earlier stated, this forms the basis of the criteria for the audit of the financial statements. Has management prepared the financial statements in accordance with the accounting standards? And so, for an auditor to be able to perform an audit, they must fully understand the accounting standards. Auditing standards, on the other hand, are used by the auditors in performing the audit. The purpose of these auditing standards is to guide auditors on how to deal with specific issues in an audit. And it includes guidance on work required to be done. The standard will specify you do the following. And so auditors must be conversant with auditing standards. At the advisory level, students are expected to have a full understanding of the auditing standards that is in the syllabus. Auditors are required to conduct audits in accordance with the ISAs. Now, auditing standards and the examination. Candidates are required to answer examination questions according to auditing standards where necessary. Candidates should fully understand the standards. If possible, make reference to the auditing standards. Sometimes the examination will quote an auditing standard, and therefore if a candidate does not know the existence of that standard or the contents of that standard, they will not be able to deal with the question. Knowledge of the provisions of ISAs or standards is essential to pass the examination. If one can't recall the ISA number, for example, at least one should still be able to refer to the provisions of the standard in order to get full marks in the examination. We now turn to audit procedures and financial statement assertions. Candidates should fully understand the link between the assertions made by management in the financial statements and the audit procedures. What is the meaning of audit procedures? This is the work performed by the auditors at the planning stage, during tests of control and substantive procedures. This is the actual auditing that candidates at this level should have competencies in. It's the work that they perform or carry out in order to obtain evidence which forms the basis of the conclusions or the opinion that will be reached. Management make financial statement claims about the figures contained in the financial statements. Then auditors come and design suitable audit procedures to test those assertions. For example, by putting a figure of motor vehicles, as earlier stated, in the statement of financial position, 10,000 kwacha, management are claiming that this vehicle, for example, existed at the period end. The figure does not represent a vehicle that doesn't exist. So the assertion is existence. The relevant audit procedure that the auditors are going to perform is to physically inspect the vehicle. They will ask for the vehicle, can you show us this vehicle? That is the relevant audit procedure, inspection of the vehicle. So basically, the auditors will request for a schedule of all the motor vehicles that are represented in the figures contained in the financial statements, and they may ask those vehicles to be lined up and for them to inspect and say, yes, this vehicle existed. However, inspecting a vehicle does not confirm the assertion of rights and obligations or ownership of the vehicle. And so to test for ownership that this vehicle belongs to this entity, the auditors will request for the white book in this case, for example, and confirm that the absolute ownership is in the name of the client that they are auditing, whose financial statements they are auditing. And so there's a very clear link between audit procedures and financial statement assertions. The auditors must have in mind what assertion is being tested for them to design a suitable audit procedure. The common mistake made by students when required to explain audit procedures is that they end up stating the methods of obtaining audit procedures. Like, for instance, inspection, calculation, and so on. Those are methods that auditors can use. And then in designing the procedure, the auditors should use those methods to design a suitable audit procedure to test the particular assertions that they require to test. Very important that candidates are fully conversant or understand the link between financial statement assertions and audit procedures. Let's look at tests of control and substantive procedures and distinguish these. Again, many candidates seem not to understand the distinction between tests of controls and substantive procedures. Management put in place internal controls as in running the company to help prevent and detect fraud and error. Auditors are not responsible for designing controls. However, the auditors can rely on the effectiveness of the controls put by management in designing further audit procedures. And therefore, before they can place any reliance on the internal controls, auditors will perform tests of control. They will design procedures to test whether or not the controls are effectively operating as they are required to. And depending on the results of the tests of control, the auditors may place reliance on them and therefore reduce the extent of substantive tests, or if they conclude that the controls are not operating effectively, they will not place any reliance and basically perform substantive procedures without any reliance on the tests of control. And so candidates should be able to use their prior knowledge on internal controls gained at 2.3 to know the distinction between a control objective, and a test of control. Business risk and audit risk. Very important area which is always examined in the compulsory questions as we have earlier seen. Business risk is the risk that the business may fail. The management may fail to meet its objectives. And business risk is the responsibility of management. And so we should be able to distinguish between business risk and audit risk. Examination questions will specifically specify what risk you need to identify and explain in an examination. And so management is responsible for business risk, and it's any risk that may cause the business to fail. Whereas audit risk is the risk that the auditor may issue an inappropriate audit opinion. This is the risk that has got three elements, namely inherent risk, control risk, and detection risk. And in the exam, like earlier stated, they will ask you, can you explain audit risk? Can you explain business risk? And the common mistake that candidates make, when required to explain business risks, they explain audit risks, and therefore no marks are scored. When required to explain audit risks, you explain business risks, because the aim, the objective of the examiner is to identify whether you understand, the candidate understands the distinction between the two. So most examination questions will require you to identify and explain either business risks or audit risks, and therefore we must be we must ensure we understand, and also make sure at this level of the examination that in answering such questions, we use the information in the scenario. Just giving general answers will not gain maximum marks. At this level, candidates should use the information in the scenario. This is the risk, deal with the risk and explain. If you are required to explain what response you are supposed to give, be able to give the response for that risk. Fundamental principles of professional ethics. These were issued by the International Federation of Accountants and adopted by the Zambia Institute of Chartered Accountants. These are applicable to students as well as members of ZICA. They are integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. And we must be familiar with the exceptions to the rule on confidentiality. For example, when a client is involved in criminal activities, the auditors cannot hide in confidentiality. They must be able to disclose this. We must be aware of the threats to non-compliance with fundamental principles. And these are self-interest threat, self-review threat, advocacy threat, familiarity, and intimidation threats. And for each of the examples of general threats, we need to know what they are. Why is this a threat? And also, we should be able to explain what safeguard should be taken. In other words, as auditors are working and operating, they will meet a lot of ethical dilemmas. And they should be able to say there is an ethical issue here, and how do we deal with that ethical issue? And in the examination, this principle will be examined. We should also be aware of the conflicts of interest between members and conflicts of interest between between the clients, different clients, and how to deal with those. In the examination, scenarios with ethical dilemmas faced by auditors will be experienced. And then the students will be required to identify non-compliance or threats to compliance with these ethical dilemmas and be able to suggest suitable safeguards. Common mistake made by candidates: you identify the ethical threat and then you don't provide the safeguard required, and therefore you will lose the marks that you need to get. Also, it is common for candidates to explain the general threats like self-interest threat instead of dealing with the ethical dilemma and conclude that this gives rise to self-interest. That is what should happen, rather than explaining self-interest. Use the information in the scenario, discuss that information, and say this gives rise to self-review or self-interest. And then another mistake is students considering independence as an ethical issue. Independence is not an ethical issue. The ethical issue is objectivity. But lack of independence will impact on integrity and objectivity of the auditors. Let's look at the audit team and stages of an audit. Let's be aware, as students taking the auditing examination, we must have a full understanding how auditors operate. Usually, a typical audit team comprises the engagement partner at the top, who is the overall person responsible and is the one actually who forms the audit opinion and signs the audit report. Then there is the audit manager, who is below the engagement partner. Then you've got the audit senior and then the audit assistants. So audit teams are designed or are formed as audits arise. And people don't remain on the same audit team permanently. We may be working on 2 audits at the same time, and depending on the experience, audit teams are assigned. Okay? And these are the positions that you experience in the examination. You will see reference to the engagement partner, audit manager, audit senior, and the audit assistants. It's important that we understand. In terms of the stages of the audit, what are the main stages? Basically, audits are in 3 stages: the planning stage, the gathering of evidence, and the reporting stage. Let's make sure we understand distinctly what work is done at each stage. For all audits, they need to be planned. Once they've been planned, then the audit is conducted, where auditors are now required to perform audit procedures. After performing the audit procedures, then the work is reviewed and the conclusions reached and the report issued. Okay? The audit reports conclusions of the audit process and contains the opinion. And the final topic we need to look at is the audit report. This is an area where students perform badly in the examination. There are auditing standards guiding in this area, If you do not know the auditing standards, most likely one would not be able to answer the questions adequately. So we'll run through the major standards on audit opinions. ISA 700, forming an opinion and reporting on financial statements, is basically a standard unmodified opinion. Unmodified meaning the auditors are happy and then they conclude that the accounts show a true and fair view. We must know the elements of an unmodified audit opinion. Meaning, you must know that it has a heading, it has an introduction, it has an opinion paragraph, it has a basis of opinion, and so on in that order. Because at the advisory level, you may be given a draft audit report with these elements mixed up, and you are required to evaluate and be able to identify and say, this is wrongly addressed to the managers, for example, instead of the shareholders. The basis of opinion is coming in the wrong place, so you need to fully understand those elements. ISA 701, communicating key audit matters in the independent auditor's report. This is a new standard that was recently introduced some 6-7 years ago, and it is basically, it was introduced to enhance the meaning of audit reports. And it's a paragraph that auditors use to identify key matters that they experience during the audit. During the conduct of the audit, there is a lot of communication between the auditors and management. So from whatever communication has taken place to deal with specific issues, the auditors will pick key audit matters which they would want to bring to the attention of the shareholders. And these are not separate opinions, but basically enhancing the report of the auditors. Then there's the modified or modification to the opinion in the independent auditor's report, ISA 705. Candidates should fully understand the three forms of modification of the opinion. There is the qualified opinion, the adverse opinion, and the disclaimer of opinion. Candidates should fully understand how to determine which form of modification, what matters to be considered. For example, in deciding whether to issue a qualified opinion, an adverse opinion, or a disclaimer of opinion, there are two situations. The first situation is where the auditor obtains sufficient appropriate evidence, and there is a matter of concern. You must examine and see whether that matter of concern is material to the financial statements, and is it pervasive to the financial statements. So materiality and pervasiveness must be considered at every stage. If you have obtained sufficient appropriate evidence, and there is a matter of concern which is not material, obviously it doesn't impact the opinion. The auditors may issue an unmodified opinion. But if it is material, then it is a matter of concern that must impact on the opinion. If it's material and not pervasive to the financial statements, then the auditors will issue a qualified opinion, which takes the form of, except for this matter, the accounts show a true and fair view. If, on the other hand, the matter is material and pervasive to the financial statements, the auditors will issue an adverse opinion and conclude that the accounts do not show a true and fair view. In the case of where there is a limitation of scope and the auditors have not obtained sufficient appropriate evidence, again, you have to use the same criteria. Is the matter material and pervasive? If the matter is material and not pervasive, then the auditors will still issue a qualified opinion. If the matter is material and pervasive, they will issue a disclaimer of opinion because they would not have obtained sufficient appropriate evidence. And so in the exam, you may be given information and then you are expected to use that theory to advise whether or not the opinion you reached is appropriate. The next standard, ISA 706, emphasis of matter and other matter paragraphs. Common for students not to have an idea what the emphasis of matter paragraph is and the other matter paragraphs. These are two separate paragraphs. Like the name suggests, an emphasis of matter paragraph is a paragraph that the auditors will use to emphasize a matter that is correctly accounted for. It's contained in the financial statements, but they feel it's so important that they need to mention it in the auditor's report, and they will do that in the emphasis of matter paragraph. Whereas the other matter paragraph is for matters that do not necessarily need to be in the financial statements. That they've been correctly accounted for, there's no problem, but the auditor feels this matter must be mentioned they will mention it in the other matter paragraph. For example, if the previous year financial statements were audited by different auditors, the auditors may wish to bring this out to the shareholder, to the users of financial statements, that previous year financial statements were audited by different auditors. The next standard is ISA number 720. ISA number 720 is on other information. This set of financial statements, the document containing financial statements, contains other information other than the financial statements. For example, it has the director's report, it has the chairman's report, it may have statistics and so on. That is known as or considered as other information. So this standard gives the duties or responsibilities of the auditors regarding other information. And the main duty of the auditors is to read through that other information and confirm and ensure that there is no inconsistency between the other information and the evidence gathered when auditing. If there is an inconsistency, the auditors will request management to amend the other information, to change the other information. If they decline, then it may have an impact on the opinion that the auditors will issue. Remember, the tool the auditors have when there is a disagreement is finally the opinion of the auditors. Now let's look at a review of the examiner's comments for the last 5 sittings. The examiner's comments is issued by the examiners after each examination session. Generally, the performance in 3.2 Advanced Audit and Assurance is poor. On average, over the last 5 examination sittings, the pass rate has been below 30%. Now, the performance in the compulsory question and the optional questions compared. From the analysis of the examiner's comments, it is clear that performance in the compulsory question is generally better than the optional questions. Most candidates score more than 50% of the available marks. Actually, almost all candidates who pass the examination will score more than 50%. It is unlikely that a candidate who scores less than 20 out of the 40 marks will pass the examination. The compulsory question is scenario-based and answers contained in the scenario. Maybe that explains why students perform better, because with a critical eye and with a bit of skepticism, you are able to pick the answers and just expand the answers. Performance in the optional questions is quite poor, as earlier shown. Now, poor knowledge of the CA 2.3 paper is also a matter that has been repeatedly commented on in the examiner's reports. Poor performance in Section B of the examination suggests that candidates do not possess the knowledge of the lower paper. It is shocking and surprising that candidates who are taking the advisory paper show lack of knowledge of the basics or principles of auditing. And the whole syllabus in 2.3 is actually covered in the advanced paper, and therefore that knowledge should be brought forward. Most of the topics in CA 2.3 are similar to 3.2, except for a few topics such as group audits and other assurances and quality control and auditor liability. The rest are exactly the same. The difference is basically how they are examined. At the advisory level, they are examined at a higher level. And so the answers that are seen in the advisory level are indicative of the fact that students have a poor understanding of the lower paper. Another observation that has been made in the examiner's report is candidates answering less than the 4 questions required. As earlier stated, the compulsory question must be attempted and in 3 out of 4 optional questions. At some examination sessions, more than 30 students would have attempted less than 4 questions, maybe 3 or less. And only 1 maybe out of those 30 will pass the examination, and they must be very good. Most candidates who attempt less than the 4 questions do not pass the examination. Not only that, sometimes it has been observed that candidates do not answer parts of questions. A question might have 2 sections, part A1 and part A2. And candidates attempt only A1 and leave out A2, completely blank without writing anything. That is very risky. When you add up those blanks, they sometimes add up to a whole question not being attempted. There are no marks deducted for trying to answer a question. candidates are encouraged to say something. If they've gone through the syllabus, if they've studied everything that is supposed to be studied, they should be able to answer and say something. You are better off. You may get the marginal 4 marks that you require to move from 46% to 50%. And therefore, candidates are reminded or encouraged to answer all parts of questions and attempt the 4 questions. Selective studying is another issue that has been seen. It would appear there are certain topics that students do not just want, and therefore evidence in the terms of the answers shows that students don't want to attempt those areas. The whole syllabus can be examined. As earlier shown, there are major topics that normally come in section A. But then there's section B also. The whole syllabus is subject to examination. The examiner can pick any topic. And therefore, it's very risky to just concentrate on a few selected areas. Students should study the whole syllabus. The aim is you must have the competencies and skills to deal with any issue within the syllabus. And therefore, the aim of studying should be to acquire knowledge rather than simply to pass the examination. Another observation is that of not addressing the question requirements. Students answering, they set the question themselves. Instead of dealing with the question that the examiner has asked, you start answering your own question. The answer may be right if the question was what the student is thinking about, but no marks at all are awarded. For example, the question requires an identification and explanation of audit risks, and the candidates explain business risks instead. The question is clear: identify and explain audit risk. Simply read through, be skeptical, identify the audit risks, and explain. If you explain the business risks that are in the scenario, you will not get marks because it suggests that you don't know the difference between business and audit risks. So no marks are awarded for correctly answering question which is not asked. Another observation is that of not addressing parts of questions in multi-requirement questions. Some questions are multi-requirement, such as identify and explain. Students who only identify and not explain, marks are awarded for each of the requirements. And so we must read the question carefully and ensure that we actually address the question requirements. Candidates should endeavor to address all question requirements. Look at multi-requirement questions, and in your answer, it is best practice to put a heading that this is the answer to this requirement. And then you answer, you make it easy for the examiner and marker to award marks. So, not addressing all parts of the question. Poor communication skills, poor English. Poor English. This is a theory paper, and it is expected that candidates would have studied communication skills. Certain simple words left out or misused can result in a loss of marks. The examiner is not there to assume and say that the student probably just made a mistake. Maybe it wasn't a mistake after all. And therefore, we must communicate effectively. If it doesn't make sense to you, the student, the candidate, definitely it will not make sense to the examiner. So it results in loss of marks. Leaving out certain words could change the meaning, very easily change the meaning of what is being communicated. Lack of technical knowledge, especially in the section B section. The work of experts and impact on audit report, for example. Someone simply doesn't know what an auditor expert is, for example, or what the other matter paragraph is all about. Complete lack of technical understanding, which means the student will just not answer, they will just leave it blank, and so on, you see. Are we together? Or you don't understand what the difference is between tests of control and substantive tests and so on. Failure to be able to analyze information in a scenario and be able to come to a reasonable, the appropriate audit opinion. Lack of technical knowledge is a problem and has been observed to be a major factor. And it's because students are not really fully studying to gain an understanding. Not relating marks to detail of answer. Generally, the maximum marks a candidate will get for a correct answer is 2. Most of the marks range from half a mark, 1 mark, 1.5 to 2 marks. And therefore, there must be a relationship between the marks on offer and the number of points made by students. If the marks are 6 marks and you just give 2 lines and so on, most likely you will not be able to get maximum marks. At the advisory level, students should use their judgment, professional judgment, and say, this is the topic I'm being examined. It's 6 marks. What am I supposed to, what information should I give? Not too much, not too little. Okay? It has been observed that there are many students who just put bullet points with little or no explanation at all. And therefore, it's important that candidates, and the question paper, is it the answer sheet, clearly explains that use the marks on offer as a guide as to how much you should write. Not using information in the scenario is a major problem in these examinations. If there are any names, for example, the partner is named, given by name, Chanda, we must mention Chanda in our answer. The idea is to be as practical as we possibly can. If there is a company, such and such a company, mention that such and such a company to show that you are able to apply the theory to the scenario that is given. This is what makes the difference between CA 2.3 at the lower level and advanced audit and attraction. And so, not using the information in the scenario will not attract maximum marks. Another problem that has been observed looking through the examiner's comments is lack of understanding of ISA's auditing standards. It's very clear that a lot of students do not know or do not bother to learn what the auditing standards guide. And therefore, from the examiner's point of view, such students really should not proceed and pass the exam until they fully understand, because this is what guides the auditors. Candidates are required in any case to answer examination questions according to the standards. Now, if you don't know the standards, then you won't be able to answer questions as such. Evident from answers that there is great lack of knowledge of standards. There are not very many standards. Students at this advisory level should be able to mention 10 standards and explain what they are without thinking from sleep, just start, this standard says this standard says that. That is what is expected, that is what we need to get. Failure to understand these standards definitely will cause problems, and the students, it has been clearly explained in the examiner's comments. Not numbering solutions and incorrect numbering. Instructions are very clear, both on the question paper as well as on the answer booklet. Students are required to number the question that they are answering. It has been observed that sometimes they either put the wrong number, especially when they change. You intend to answer question 2, then you end up answering question 3. Please ensure you correct that. These things are marked by human beings. There's a risk that the examiner may think this is a wrong answer to the correct question indicated. And therefore you may lose mark. It's a risk. The examiners go through, but there's a chance that you may be marked wrongly because of poor numbering. Some solutions placed in letter answer booklet pages, not numbered, making it difficult for markers. In other words, you're answering question 2. And then at some stage you leave out part C of question 2. Then you go and put it somewhere in the last page without any reference whatsoever. That should be avoided, and you should number all the parts of the questions. Candidates not following instructions. Answering questions using graph paper at the end of the answer booklet. Each answer booklet has got a graph paper, and this is a theory paper, and it has been observed some students go and write on the graph paper. You can imagine how difficult it is to read when you write over graph paper. Please, candidates, just follow the instructions. Answer the question on a clear paper, not using graph paper. And another problem that has been observed is that of starting to answer a new question on the same page as the end of the previous question. The answer booklet is very clear. Please read through the instructions. Any new question should be answered on a new page. Again, to ensure that you are not disadvantaged through someone thinking this is a wrong answer. Sometimes students write in the margin for that matter. The margins are for the examiners. This is where the examiners are supposed to indicate the marks that you score. Now, if you write on the margins, when they put the marks there, there's a risk or there's a chance that those marks may not be legible and therefore may not be added or accumulated to you. Let's quickly look at the suggested examination technique which can be used in order to enhance or increase the chances of passing this examination. The most important one is the time management. Careful use of the 15 minutes reading time. The 15 minutes reading time, you should be able to have a good understanding of how the exam is in the 15 minutes. Be able to know the topics which are coming and exclude the topics that have not been examined. The paper is for 3 hours, which is 180 minutes, and it's 100 marks, which means it's 1.8 minutes per mark. And therefore, question 1 should be attempted in 72 minutes. And discipline demands that actually you attempt it in 72 minutes. Once the 72 minutes has been exhausted, move on to the optional question, each of which should be answered in 36 minutes. That is the only way you are likely to attempt all the 4 questions without any problem. If you exceed in answering 1 question, most likely you won't be able to attempt the last question. And as earlier shown, then you risk failing the exam. So do not overrun on time. Stop and move on. Cover the entire syllabus in preparing. That's another issue. Practice with examination questions, past examination questions, exam standard questions. You do practice and under exam conditions, and mark yourself and see whether you have actually attempted the questions. Attempt the 4 questions required as earlier stated. Answer all parts of the 4 questions as earlier emphasized. Follow the instructions on the examination paper and the answer booklet. We will now consider any illustrative questions covering major topics. A whole examination standard paper has been set, and we're going to go through all the questions and identify and see the major problems that students are likely to face. And so in this question, we've covered the topics of risk, ethics, client acceptance, audit procedures, auditor liability, quality control, finalization, and review. These topics have been included in the questions. The question paper and the suggested solutions are available in Word and will be shared by the Zambia Institute of Chartered Accountants, so that students will have access to these documents in Word. But now we are going to just look at the requirements and consider the likely mistakes that students may make in answering such questions. So the recommended approach in answering examination questions includes maximum use of the 15 minutes reading time. Read the question requirements first and have a feel of the requirements. It's very important that you read the requirements so that as you read the scenario, you will know what you are trying to answer. And it's recommended to start answering the compulsory question first. It is optional. If you are disciplined in terms of time, you may start answering an optional question. But putting the compulsory question last is very risky in the event that you run out of time. And read the case scenarios and be skeptical and take note of the important information. If, for example, you are required to identify audit risks, and you read and you are almost ending reading the question and you haven't identified any risks, then it means there is a problem. So be skeptical. The risks will be contained in the scenario. The examiner is unlikely to ask you to identify something they've not put in the question. So just be skeptical and question everything, and do this quickly within the 1.8 minutes that you need to do for each mark. And plan your answer and ensure you take into consideration all the question requirements. Use short headings. Don't recopy the question. Just a short heading is good practice to use short headings to show the examiner that this is what this answer relates to, and so on. And then the obviously correct use of the time available. Note the time of starting the answering a question. If you start answering question 1 at 9:15, take note that I've started at 9:15. I'm supposed to end at 10:05. And then you keep checking. The cycle should be the question paper, the answering, and then the time. Occasionally you need to look at the time that has been put or provided by the center. And so we are going to look at each of the requirements for this examination paper, which we have set. And like earlier stated, you are going to be provided with a Word document, which will have the same comments that we are going to go through now to help you understand. And students actually can use this as a mock exam and compare your answer with the suggested solutions. And so, starting with section A, the compulsory question. The instructions say this question is compulsory and must be attempted. So we'll quickly run it through and see what you need to highlight for those who are used to highlighting in the question, you don't highlight everything, you highlight the important things so that you exclude all the matter, all the information that may not be necessary in answering your question. We'll quickly read through. For example, the question 1 reads, your firm of chartered accountants, Chimumba and Associates, bid for the offering of audit services. In fact, let's just run through and look at the requirements before we read that question. If you go to, let me just go to the requirements. Question 1A says, describe 4 audit risks that Chimumba Chartered Accountants should consider. So it's 4 audit risks in the audit of group financial statements. Okay, so it means there are group financial statements and also there are individual company financial statements. So the audit risks here should be those that are related to the group auditors. Now, weak students will mix these and will bring risks related to the individual audit and therefore not gain marks, because the objective is to identify whether a student understands the difference, that there are different auditors for the group financial statements, and then there will be a different audit team for the individual audit financial statements. Identify and explain 4 business risks in the audit of the financial statements of Kapiri. So group and now the parent company. Okay, then part 2 says identify and explain 5 audit risks in the audit of financial statements of Kapiri. For each risks, suggest a suitable safeguard. So the other one is basically on audit or business risks. The next one is on audit risks and then suitable safeguards. Okay, and part C says identify and explain 5 ethical matters in the audit of the financial statements of Kapiri and the consolidated financial statements. So the ethical matters, it doesn't matter whether they relate to the parent or the group financial statements, and there must be 5. Explain the link between financial statement assertions and substantive audit procedures. Suggest 4 audit procedures each that should be performed in the audit of fair values at acquisition and on goodwill arising on consolidation. And so let's look at the main mistakes that students are likely to make. Where the question requires 4 audit risks for the group financial statements, students discuss audit risks of the individual audit company. So let's make sure we know the distinction. Okay? And it says identify and explain, which means you don't only identify, you should explain the audit risk, why it is in the business risks. Why is it a business risk, you explain. Another mistake that is made, they've asked for 4 business risks. Students will maybe only identify 2 or less business risks, and therefore marks are awarded according to the correct risks that have been identified. Identify and explain 5 audit risks. Again, there must be 5. If you give less than 5, then obviously you get marks in proportion to the correct ones that you have given. And the question goes on to say suggest a suitable safeguard, which means for each risk you suggest a safeguard. And the best format to use in that case is 2 columns or a table form. In the first part, you identify the audit risk. In the second part, you identify the response or the suitable safeguard to that audit risk. In the case of ethical matters, identify and explain ethical matters. Again, students either identify without explaining, again losing easy marks, and also either explain or identify less than the 5 required, and therefore you lose marks. And sometimes they don't suggest suitable safeguards, therefore losing again the necessary marks. Part D says explain the link between financial statement assertions and substantive audit procedures. This is technical. If you do not know what financial statement assertions are and you don't know what substantive audit procedures are, you simply leave it blank. Whether you are given 2 days, you won't say anything. And hence the need to ensure we understand these technical issues. You need to really be able to show that you understand. And then the last one says suggest 4 audit procedures each that should be performed in the audit of fair values at acquisition and on goodwill arising on consolidation. So 4 audit procedures each, which means for fair values, 4 audit procedures. And just say audit procedures, fair values, and procedure number 1, number 2, number 3, number 4. And then for goodwill arising on consolidation, audit procedures, number 1, number 2, number 3, and number 4. But if you only give 4 audit procedures for both, then obviously, most likely, you will get only half the marks. And again, this is just an illustration of the need to understand the accounting. So a student who doesn't know the accounting for fair values is unlikely to suggest suitable audit procedures. Neither a student who doesn't know the accounting for goodwill arising on consolidation, they are very unlikely going to suggest audit procedures. So please ensure we deal with these issues. And when you go into the question, it is recommended that you highlight the important things so that you eliminate the chaff that is likely to be contained. But the questions will be quite lengthy. These are scenario-based questions. And these issues will be mixed. So there will be ethical issues, there will be auditory risks, there will be business risks, and so on. So as you read through, please ensure you just highlight the ones that you think you will need in answering the question. Because remember, you only have 72 minutes in which to attempt the compulsory question for 40 marks. Okay, if we move on to section B, there are 4 questions in this section. Attempt any 3 questions. As earlier stated, ensure you attempt each of the 3 questions that you choose to attempt it using 36 minutes each. Now, we'll look at the requirements again. The first part of question 3A says, describe the matters that should be considered before your firm accepts nomination as auditors of Mopani. Remember, we say the performance in section B is very poor. Now, you are required to describe the matters. It doesn't say how many matters, which means the matters must be in the short scenario that should be considered before accepting. So a candidate who doesn't know the professional requirements on accepting audit appointments will not be able to attempt this question. You need to know what is it that they are talking about. Is it a new industry? Is it an industry that we, the auditors, have no experience in? Do we have the time? Is it a matter of time? Can we be able to accept this client and so on? So these matters to get maximum marks, probably 3 or 4 well-explained matters should be able to gain candidates marks. But most likely, those who do not have the technical skills or technical knowledge on appointment or the knowledge on accepting appointment or nomination, they will not be able to answer that correctly. Now look at this other one, part B. It has 3 sections, 1, 2, and 3. Explain the responsibilities of management and the auditors for fraud prevention. Fraud is a major issue in the accounting field or in practice. And so the management has the primary responsibilities, auditors have a secondary responsibility. And again, the standards, ISA number 240, clearly explains what the responsibilities of both management and the auditors is. So if a student does not know that ISA number 240 gives guidance, then they are unlikely to answer that question competently, you see. And then the second part is on auditor liability. Auditor liability says, advise Ginger PLC on the litigation of Rose Chartered Accountants for professional negligence. Advise Chanda on the litigation against Rose Chartered Accountants. So we have a company that bought shares in a company audited by the auditors. And then later on it was found out that there was a fraud that took place and the auditors did not discover that fraud. So that company, which relied on the financial statements of audited by the auditors, decided to sue the auditors to say, look, you were negligent in the performance of your work. And even a shareholder, Chanda, who lost in terms of a drop in share prices, also thought the auditors were negligent. And to answer this question competently, the students should be fully aware of the provisions or the case law regarding auditor liability. Who can and who cannot sue the auditors? Under what circumstances can someone be compensated or awarded damages for professional competence? In this particular case, for instance, in terms of Ginger PLC, one of the partners, the partner who was involved in the audit, attended a negotiation meeting, and stated that we stand by the financial statements prepared by us, by the client, and we stand by that opinion. So by so stating, this client or this partner created a duty of care between the firm and that company which bought off the other company that was being bought off. And you must know and quote the relevant case law. So for 6 marks, you cannot just give a one answer. You must first of all explain what is the criteria, under what circumstances can one win in a case. There must be a duty of care, and there must be, the litigant must prove that there was a breach of the duty of care, and that they suffered loss as a result of the breach. And then you go to the now specific, what are the facts in the case, and then be able to conclude and say, my advice or our advice to Ginger Limited or PLC is that yes, there is a duty of care by the partner stating that they stand by their accounts, they've created a duty of care, and therefore that means they can sue. But then they have to prove that there was a breach of that duty of care, and they have to prove that they suffered loss as a result of that breach. So you can see it's not straightforward. You need to understand the technical aspects and be able to apply to the information in the scenario. Okay, the third question is on materiality. Let's see. But it has 2 parts as well. Part A talks about explain performance materiality and suggest a suitable performance level for the audit of the financial statements of Tree Limited. So again, if one doesn't know what performance materiality is, which is a technical issue, then they won't be able to answer, and they will lose those 2 marks. And they must know that performance materiality is always lower than the materiality for the financial statements as a whole. And in this question, there was a figure given, and all students needed to say was the performance materiality is probably the one that the auditors will actually use in the performance of the audit, and it must always be lower than the materiality for the financial statements as a whole. The second part talks of suggest 4 audit procedures that should be performed in the audit of 12 million, the audit of the figure of 12 million in the financial statements. I think this is assets held for sale. The 12 million is, it says the draft financial statements of Tree include the following: assets held for sale, 12 million. Now this is a financial reporting issue. So if the student answering an auditing question does not know the accounting for assets held for sale and the requirements in terms of how they should be presented in the financial statements, they are unlikely to answer that one, to suggest 4 audit procedures, and therefore may lose all the 6 marks. So we need to understand what are assets held for sale, what is the accounting for assets held for sale, what are the assertions being made by management. Then we can design suitable audit procedures. So again, it's a matter of not knowing the accounting aspects, and that's what causes actually students to score poorly. The second part, it's about going concern. Discuss the importance of the going concern ability of a client company. Again, there is a guidance. The auditing standards, ISA number 570 gives guidance on going concern to student. So it's saying, what is the importance of going concern? Why are auditors concerned about the ability of a going concern of a company? Basically, we are saying if the historical financial statements as we know them can only be prepared on the basis that the company is a going concern. If it's not a going concern, the accounts should be prepared on a breakup basis. And so it's important that auditors determine or conclude whether or not the company is a going concern, so that they confirm that the basis of preparing the financial statements is appropriate. Otherwise, if it's not appropriate, then the opinion will be a modified opinion, obviously. And then it talks about other information. Describe the work that you need to perform on the report of directors and the chairman's report. You can see in this question, they have not mentioned other information. The question says, describe the audit work that you require to perform regarding the report of the directors and the chairman's report, clearly explaining any action that you may take. Immediately the student should know that this is talking about other information, because that's what the report of the directors and the chairman's report is. And so guidance in ISA 720 should be considered. Again, if the student has no clue that this is ISA 720, very unlikely that they will answer this question adequately. And then there's another question: describe the duty of your firm with regards to subsequent events. Again, a typical example of a question where you need to know the accounting. There's IAS number 10, subsequent events, which deals with the accounting for subsequent events. Then there's ISA 560, which deals with the auditing of subsequent events. And there are certain key dates that the auditors need to know. So unless you understand the provisions of IAS 10 and the provisions of the standard, you are unlikely to answer that question correctly. Question 4, part A. distinguish the risk assessment performed at the planning stage of the audit from the assignment to give assurance on the risk assessment processes of Magoye Limited. So risk in audit is conducted, risk assessment is conducted at the planning stage. And then you can have an assurance, another engagement to assess the risk assessment processes of a client entity. The two are distinct. The first one, the one at the planning stage, is part of gathering evidence which will form the basis of the opinion of the auditor. The other one is covered under other assurance engagements in the study material. And is basically, the auditors are not forming an opinion on the financial statements, but rather they are trying to assess how effectively management manages its own risks. Again, the answer must be very clear that you discuss the risk assessment at the planning stage, and then the risk assessment, which is done as a separate engagement. The second part talks about responsibilities of management and the auditors for going concern. Again, you need to have an understanding of the auditing standard. Okay, and then it talks about material uncertainty. Suppose there is doubt about the ability of the company as a going concern. For 2 marks, it discusses the existence of the material uncertainty regarding going concern on the audit opinion. What is the impact if there is material uncertainty? You conclude as auditors that there is material uncertainty. What impact will it have on the auditor's opinion? Okay, how does it impact the auditor's opinion? Obviously, this is dealing with disclosure. It depends on whether management has adequately disclosed the material uncertainty. And if not, that's what will determine the opinion. Okay, and then the last part suggests with justification an appropriate audit opinion of the financial statements of Victoria, assuming that the company is that the going concern basis is appropriate. What is the audit opinion? So it depends. Again, use the information in the scenario and be able to say, talk about materiality and pervasiveness, and then conclude. Because you are given sufficient information. I think this is the one that talks about uncorrected misstatements and so on. So you should be able to argue and suggest and justify why you feel a particular opinion should be given. And so the mistake candidates will make it, they will just say, look, we issue a qualified opinion without explaining why they think a qualified opinion is the appropriate one. The last question, question 5, is also divided into 2 parts, parts A and B. Part A talks about write briefing notes detailing the meaning of reviews and audits of financial statements and recommend one Giraffe Limited should opt for. Should they go for an audit or should they go for a review? Again, technical. If you don't know what a review of financial statements is, then you cannot answer this question. If you don't know what an audit is, then you cannot answer. And that is what comes out in terms of students answering questions. Respond to the request by the board of directors that the audit firm should be, to be appointed should assist in putting in place internal controls. Very easy question, really, for the application level. Management has requested that the firm should help in putting in place internal controls. What is your comment? You need to argue and state that actually management is the one which has got the responsibility or primary responsibility for putting in place internal control. Part B, describe the form of insurance that the firm should take to comply with the requirements of the Accountants Act. Accountants or auditors are required to take appropriate insurance, and therefore it was a knowledge-based question, or it's a knowledge-based question. Students should be able to explain each of the two. And then distinguish quality control at the firm level and quality control at the individual audit level. If you have no idea what quality control is, again, it's likely that the student will not perform well. Briefly describe any 4 elements of quality control. Again, these are as given at the firm level by ISQC 1. So you just pick any 4. Now, if you don't know what the provisions of ISQC 1 are, then it is unlikely that the candidate will be able to deal with that question. And so this question, as earlier stated, has been will be provided in Word format, both the question paper and the solutions. And in the question paper, the common mistakes will be shown there. You'll be able to see what the common mistakes that students make are. And so this marks the end of this presentation, and wish you well even as you prepare for the next examinations that you'll be taking. I thank you, and this marks the end of the presentation.